Welcome to Streaming Deluxe. My name is Mr. Orge and welcome to this new video on this Sunday, my friends. Today we will talk about Zynga, the company Zynga Incorporation, ticker ZNGA. You can see it here on Yahoo Finance. Great page, check it out. I don't have any partnership with them. I'm just using them here in this video to show you some charts, my friends. Also, I want to a little disclaimer. I am invested in Zynga. I'm invested in Zynga, of course, but I have no other relationship with the company, and also I'm not a financial advisor, my friend. So I'm just a YouTuber, and in general, don't believe any YouTuber when they tell you something. I'm going to explain you here what I think about Zynga, what my moves are on Zynga. And yeah, let's jump directly into it. And of course, before I forget it, you can also win a Steam key that I'm going to choose at the end or in the middle of this video with YouTube comment picker, Steam key giveaways. So in order to win one of those, you have to comment, like, and subscribe my videos on here on YouTube. And then you can win one of the Steam keys down below in the pinned post. So I know, guys, a lot of my viewers are not invested in the stock market. This is not, maybe this is not for you, so you can skip this video, but this video is maybe more interesting for some investors, for people that like investing in gaming companies. So therefore I want to cover this here. All right, guys, Zynga. What is Zynga? This is Zynga. So you can see it here. They make mobile games for tablet, for phones, easy games. Mostly they get popular with Farmville. So we can check out the Wikipedia page. You can see here, for example, that they launched Farmville on Facebook in June 2009. We all remember this, or at least I remember this. I was in university and everyone was playing Farmville, and I was back in the times like, yeah, come on, guys, play some real games. I was not playing a lot of games in 2009, so I had my gaming pause when I was in university. But they got 10,000 million daily active users, so DAU. That's a very important indicator that you're using for gaming companies. And then they had, even then in 2017, they had 30 million monthly active users, so that's MAU. So this is what you use. And then they came with other games like Zynga Poker Friends, etc. Friends 2 they call it. And then they started trading in 2011 in December at the NASDAQ, of course. And now, very interesting, this is maybe interesting for the forward-looking approach. So Zynga is a growth company. I'm going to tell you this immediately. As of February 2021, Zynga is currently working on a free game for mobile device and Nintendo Switch. And I think the aspect Nintendo Switch very interesting. So that they work for a free game about the Star Wars universe for Nintendo Switch. So this is pretty cool. So if you're more interested in this company, I would just recommend you check out the history here and all of the other nice ideas that are written here on the Wikipedia page, business model, so with Hasbro and corporate culture. So overall, I would say it is a decent mobile gaming company. So other mobile gaming companies are Activision Blizzard, for example, and we talked about this last week. So let's go and look a little bit at the stock, my friends, because that's the reason why you're here. Where are we standing? So here I get a nice summary. This is the nice summary page, and if you look now, oh god, so the stock was actually falling a lot. It was on the top $11.15 in February this year, but like all the other stock, it just dropped. And where are we now? We are more or less at the same height now, pre-pandemic. And this is very important. This is important, and this is for me personally a very important measurement now for going into next year, because everything that happened in the pandemic, people sitting at home playing with their mobile phone games, playing video games in general, this disappeared. So this is not there anymore. This has been sold off. So people sold off also other gaming companies like Activision Blizzard, like Take-Two, etc. Well, at the moment we see a negative EP earnings per share ratio. That is not really cool, but the market cap is pretty big already, I have to admit this. And if you look now at the earnings, at the overview from the earnings, you see like missed, also not very cool. And then you see even for 2020 we see that they have a negative earnings. This is also not really cool. So very negative indicators, I have to say. Well, and then we look at what the analysts say. Currently it's 658, that's the price, and the analysts have an average of 1081. But this doesn't tell us a lot. This doesn't tell us a lot, because this could just mean, guys, this could just mean analysts totally forgot to adapt or adapt their rating. So you see, for example, here B of A Securities, never heard about them, but this is like from the 6th of May upgrade, and all the others, the recent ones, say just maintain it. So this is actually a very negative feeling. So overall, my friends, you see, this stock is really perceived as a negative stock. It's not a meme stock, I also have to say this. Very negative. Well, business-wise, as Zynga Poker comes, Zynga launches core new copy of Thanksgiving events across several titles. Nothing special. We all have this. So then Moodly Fool, you can read the article why it's time to buy Zynga stock. We can click on it maybe already. And then we say Moodly Fool, Zynga share price got a nice bounce last week after it reported strong third quarter earnings results. The mobile game developer reported a sequential decline in bookings over the second quarter, but bookings still grew 6% year over year. All right. So then click on continue reading. So it's Moodly Fool. They're going to tell us you can buy it not. So it's not very clear. But yeah, that's what all those analysts want us to tell. I mean, therefore, I'm coming now to the chart, guys. If you like Zynga, and if you're interested in investing in Zynga, I'm already invested. I'm like 20% down now. I have to admit, I bought it around about here, and bought now recently a little bit more. I think here around about here, bought a little bit more. So I'm now in the minus. So obviously, I bought too much. I bought too much now too early, and my question is now for myself, shall I buy some more? Well, the question that you have to ask yourself, are you in for this market for just 1 month, for 2 months? Are you in for this for a year, or can you wait, for example, for a company like 5 years? Because when they went public, look what happened when they went public. Oh my god, look, they went public here with 11, they went up to 15, 16, and then they completely dropped to $2, my friends. To do $2. So this is honestly, this is pretty bad in 2013. But this was not a really good time. So yeah, and then even here they topped a little bit in 2014, and then they were at a very low price here. 2016, this was the absolute low, and then they came slowly back. So, and this is now actually the run we see. So this is the run we see. The company is maturing. I call it maturing. And then we go here up to 2020, March 2020. You know what happened, especially stay-at-home stocks, stocks like Zynga, where after this, of course, they got a big pump, a big upwards bounce. And this is what we see here. Hoppala. So this is what we see here, this big bounce up. Then on the top, like around about $12. So of course, if you bought then here, you really feel bad now, because you lost like more than 50%. But I hope you didn't buy here. And I was not buying this top up. So I'm buying now the top, from the top, the downward. I'm buying the downward. So when I will buy more. So of course, we're way under the moving average. So from this point of view, it's definitely not really useful. So I tell myself at the moment with those stocks, look, just go back to the time before the pandemic came, and then see how it developed since this. And if I look now at this stock, for example, then I would say we're already through it. So I bought probably too early. Okay, I need to look then at some other parameters. So maybe I look now at the more long time trend from 2017-16 coming. If I look at this trend, then I would say if we could now see actually a little bounce here. We could see here a little bounce at 650, 660. We could see a little bounce on the upward line. On the down, on the underline, on the we definitely have a lot of more way to go down. So I would say here, so imagine just like 6. We can even go to the $6. So in case it goes to the $6, I would have to look very good again at the stock and see if actually something fundamentally is wrong with the stock. If the growth story is not working out anymore. But if not, if it just goes down because for technical aspects, from a chart perspective, then I would say $6 is definitely a reason where I would just buy really much more. On the other hand, so if it now gets a little rebounds here, then it might be also interesting actually for me personally to get into it. So it's a very young chart. It's a growth stock. It's a young chart, even that from 2012. Oh my god, what are people saying that buy now SPACs? It's a very young chart, but I think you can already read a little bit into it. So I think what is the most important part is that 50% downtrend is not hurting you. So a 50% downtrend is not hurting you if you buy this. So keep this in mind. So therefore, small positions, very small positions, well diversified. So therefore, I tell myself it's okay. Even if I would drop now 20-30% more, I'm okay. So maybe then I really would purchase here, because I see now since 2016, I see definitely 2016 here, I see that trend actually starting to confirm. Everything else was exuberance, was just craziness. This was definitely not right. Everything that happened here after the pandemic was definitely not functioning. This was not correct. This was not right. Maybe a little bit, maybe a little bit, maybe a little bit. So we should maybe be like something like here at 9. Yeah, maybe at $9.59, so something like this. So, but I would say we're a bit too way down, but I would not exceed $6. So this is a little bit what I'm going to do. I think we have to see if it confirms, and then if not, $6 are coming. So guys, very important. Keep this in mind so that you can actually make an informed decision. All right, let's start the raffle and choose a winner of my Steam key giveaway. Oh, we started. So now that all those games, you could look all those games you can choose one. Then I have to. So I have to choose another winner. I see. So okay, we will do this immediately. I'm just have to get the link. Not really good page, and we choose the winner, and the winner is I hope not me again. Fardine won. Okay, Fardine, you won. You know how this goes. All right, guys, let's go back to Zynga. So, and I wanted to make a little comparison as well with Activision, because I think that's maybe now important. I'll show you here this chart. So this is the Activision chart, and also here this is when the pandemic started, and we're now, when it comes to Activision, you can see we're also hovering a little bit now over the pandemic start run. So therefore for example, I bought here a little bit more. I'm also invested in Activision. So therefore it's very interesting now to also have a look at Activision. So I just wanted to tell you this as well, guys. All right, so video is already long enough. If you enjoy those stock market videos, so please give me a like and subscribe to my channel. Of course, I mostly talk about Steam on my channel, but I'm also making since I saw that actually my last Activision stock video really went well. So I thought like, okay, let's share a little bit more of this second hobby after gaming that I have, talking about stocks, but especially here on this channel I would only talk about gaming stocks and not about other stocks that I think let's stick it a little bit to the context. All right, guys, thank you very much for watching this video. See you then next time. Bye bye.